Everybody wake up, it's important. We need to talk about Tesla earnings. Let's go check the earnings. Let's click on this, let's open it. Newsflash, earnings don't matter for Tesla. Of course they do a little bit, we're gonna get to that. But I'm telling you right now, just last quarter, people were saying, delivery numbers are at an all-time high. Why is the stock dropping? Guys, let's take a step back for a second. Per usual, we're logical people around here. We're thinkers, right? And to do that, we need to rely on objective data. We need to rely on numbers that guide our decisions and guide our opinions. And I want you to just take a step back and think for 1 second. Do you really think it matters how much money Tesla is making from their car operations alone if they're trading at a market cap greater than the next biggest 20 automakers in the world combined? Obviously, they're not a car company. In fact, I'd go as far to say it virtually doesn't matter at all over the coming years how Tesla's car company performs. And I'm not including robotaxi in that. Now, how does that make any sense? Well, let's look at some data and talk about it. CNBC posts why the stock is falling. Tesla reports revenue growth after 2 down quarters. They missed on earnings. Profit margins are going on. They're spending a whole lot money on some research and development. Operating costs jump something like 50%. In English, what do you think that means? Where do you think that money's going? Yes, obviously it's going to robotaxis and Optimus. They're going all in. Like we see with Nvidia leading the AI arms race, they're going all in on building out as many GPUs as humanly possible. Tesla sees a very similar opportunity when it comes to robotics, when it comes to a robotaxi fleet. And you can see here, Tesla stock dropped something like 6.6 or 7% roughly over the past day and a half, directly following earnings. And then what do you know? Literally the morning of earnings, we go straight back up about 8.5% total. These are massive swings, but nothing new in the Tesla community, as we all know. Now, again, usually when a company reports earnings, you go look at those earnings. You go look at what the CEO has to say, and hopefully they're willing to justify or give an explanation as to why their revenue growth year over year in Tesla's case is down 2 consecutive quarters. But as we all know, Elon likes to operate a little differently. So what did he have to say on the earnings call?
There needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane. And I think that sort of number is in the mid-20s approximately.
So I know that was a quick little bit, but this is important. Elon says if he's going to build out this massive robot army. You can imagine Optimuses working all over the world in your kitchen on Tesla production lines, which they're already doing. You could see his beautiful, sleek robotaxi design everywhere, no steering wheel. Everybody's just sitting in the car, vibing out. If he's going to do that, he demands a bigger share, a bigger control of the company, because he doesn't even want to allow the opportunity. He doesn't even want it to be a valid option for shareholders to oust him as these dreams of an AI completely automated robotic future are to come true. He doesn't want some other guy in charge of this insane technological revolution that we're seeing right now. So he says, give me this $1 trillion pay package and I'll make sure we get there, or at least I'll try my best. If not, I'm gonna walk away. And best of luck doing this with anybody other than Elon Musk. And that holds a lot of weight. That's a pretty valid thing to be concerned about, because do you think if anybody else was leading Tesla that they would be worth more than every other car company combined? Don't you think at this point Tesla's market cap is pretty highly dependent and highly correlated with Elon Musk's ambition and with his wealth? Probably, right? Now, there's a lot of things that could go wrong. As we've mentioned many times on this channel, at the end of the day, all that matters is execution, right? If you don't execute on said goals, on said ambitions, on what sounds like borderline insanity sometimes whenever Elon's talking about a future technological advancement, if you don't execute, then it really doesn't matter. And right now, what we're seeing is they are executing. Are they executing as fast as Elon once promised, as Elon once hoped? I mean, no, but that's okay. Technology takes time, and we'd rather, completely autonomous vehicles that have the weight of a human life in the balance, we'd probably rather those take some more time rather than rushing those things into a preemptive or unfinalized state, right? And there's others out there that argue that Waymo is crushing Tesla. They're laughably far behind Waymo. Tesla robo-taxis suck. All great headlines, all make you click, all make you feel something like, oh, maybe I should be more concerned about this whole Tesla robotaxi thing. But at the end of the day, they're getting better. FSD 14 is rolling out in late October, and with each release, you'd expect there's some performance improvement, there's some safety improvement. Now, let's not belabor the point. It takes time. And if there's one thing that Elon Musk has taught us in its history, is that he makes a lot of promises, a lot of bold claims. Usually they come to fruition after some time. He usually overpromises things on these really aggressive timelines, but eventually he gets there. Now, we said we were gonna base this analysis on numbers, on data. Where are the numbers? Where is the data? I'm glad you asked. Let's first look at what Cathie Wood has to say about Tesla, has to say about her Tesla price target. And keep in mind, Tesla's trading for about $450 per share right now, about a $1.5 trillion market cap. Cathie, what do you got for us?
$2,600 per share. And joining us right now, first on CNBC at the table, is Cathie Wood, CEO and CIO of ARK Invest. So $2,600 a share.
Yes.
Help us do the math. How do you get there? What has to happen for all of that?
Get there?
This is a 5-year price target, as all of ours are. And what has to happen is an autonomous taxi platform, Tesla's autonomous taxi platform, which is a SaaS-like model. Instead of selling a car and maybe the software package, and that's it, this becomes a recurring revenue model, a slice of every mile driven on that autonomous taxi network. Very high margins. Right now, auto gross margins are around 16%. Gross margins in the SaaS world are more like 80%.
All right, Cathie, whoa, slow down there. I will say that was about a year and a half ago. That was in June of 2024, so important to keep in mind. But before we get to Cathie Wood's data, let's actually go back, because I'm getting a little bit of deja vu right now. Do you remember a time way back in 2020? We're talking about pre-COVID era right here. January of 2020, some little money manager predicts that Tesla's gonna go to over $6,000 per share, and she originally predicted $4,000. Everybody on this earth was calling her clinically insane. You had her therapist, her psychiatrist calling her up and saying, Cathie, are you okay? Are you clinically insane? What in the world are you talking about? How could you possibly make such a prediction? It hurt some people. It hurt their soul deep down. I will say, when I read this way back in 2020, I also thought she was a little insane. But how right was she? Tesla has split 15-1 since then, which would put us at $400 per share. Tesla in January of 2025 was trading at about $450 to $480. Obviously, that was a pretty euphoric time. So Cathie Wood absolutely defied the odds. I mean, probably 99.9% of people were doubting this story at the time. So it was pretty incredible. And we're getting a deja vu moment because you know what? Cathie Wood just projected a $2,600 price target by 2029. 5 years out from 2024. She thinks Tesla's stock is going to just about 6x from where it is right now. So is she insane? Can Tesla hit a market cap of its 1.5 trillion today? Cathie Wood's price target puts it at around 9 trillion, which is double what Nvidia sits at right now. Again, we rely on data around here to tell a story. We don't just make up opinions on the spot that sound impossible and sound illogical before looking at the data. So Cathie, what kind of data are you using to get this prediction? Oh, Cathie, what the? You didn't have to be so kind. I don't know how that got there, but I guess you should subscribe if you're watching the video. We're talking about a bear case. In the bear case, Tesla by 2029 is going to appreciate something like 450%. Not too shabby. In the bull case, we're talking about a company worth more than $10 trillion. This all comes back to how we introduced this video. Tesla earnings don't matter. Cathie Wood is making it clear and obvious what she said in the interview with CNBC, what she's telling you in this Monte Carlo simulation right here. If there's no autonomy, Tesla is a car company that has, 16% margin? When you move into the world of software as a service, the margins are much, much higher, much juicier, and that justifies greater valuations because profits go way up. So no autonomy, we're absolutely screwed. But as we've seen, there's been recent catalysts. We've seen Robotaxi is operating in Austin. Robotaxi is operating, I think, in San Diego and California. Although limited and although supervised, it's a promising start. It's a step in the right direction. And now these are the charts that really paint the picture. If I have to see one more person on X, Twitter, whatever you want to call it, if I have to see one more person talk about how, oh my God, Tesla stock is dropping when they delivered a record amount of cars this quarter. Guys, it doesn't matter how many cars they delivered. That literally has zero to do with their current valuation. At this point, the money that Tesla makes from their car company, not including Robotaxi, the cars that people drive or buy the FSD subscription, those cars, as long as they can generate a pretty significant profit, which they have been for some time now, and maintain strong cash flow, then they can funnel all that money into the business that's actually going to drive their growth going forward. Because obviously Tesla's not operating at this level of financial excellence that justifies the highest market premium in probably human history. So baked into the stock right now, you can probably assume a lot of that is just premium investing in an Elon Musk company, any company that Elon Musk runs, any company that Elon Musk founds, usually is worth a very pretty penny compared to the money that they're actually making, right? I see these big time analysts on Wall Street always coming to the conclusion like Tesla is uninvestable or Tesla is not researchable. It's like, guys, you're kind of missing the point. The financials in this case pretty much don't matter as long as they're able to turn a profit and invest all that money into FSD research, into AI chip development research, into Optimus. All these things are what's going to drive future growth. If you don't believe in that growth story, then obviously Tesla is uninvestable. Anyways, you can see here, this clearly proves our point. In the case of an $8.2 trillion company in Tesla, 88% of that valuation is going to come from Robotaxi. Less than 10% is going to come from their car business. This is such an incredibly important distinction to make, an idea to take with us going forward. Again, we're not going to go into all the financial technical terminology here, but just look at this chart here. The projections that we're seeing if Elon Musk can pull off this massive robotaxi fleet are ridiculous. We're talking NVIDIA level numbers right here. That's when you know you're getting somewhere. They're projecting the car business in the bull case to generate about 400 billion, but the autonomous ride-hail revenue, robotaxi revenue, to come in at almost $1 trillion. And the margin just absolutely explodes. Like we talked about, it's no longer an automaker business. It's almost like a software as a service business. And when you're a software as a service, not only do your profit margins go up, but your valuation premium usually goes up as well. We see that with Palantir trading at 530 times earnings, PEG ratio of 8.5. People are paying a lot of money to get invested in the Palantir growth story and an exceptional amount of money to get involved in the Tesla growth story. If we see the bull case play out, that's a 69% return per year for the next 5 years. That is absolutely absurd. This report came out June 12, 2024, right about when Cathie took that interview with CNBC, and everybody was going bonkers and talking about how it's so impossible for that to be in any world that's reality, based on their analysis that they did have 2025 to be the most likely year of a Tesla robotaxi commercialization. Again, early stages, but it's here. How fast are they able to grow that service, attract users, get people through that initial friction of, oh my God, I don't have a driver in the car. This car doesn't even have a steering wheel. I have no control of what's going on, right? Those are some barriers to entry for users. And one of your biggest questions should probably be at this point, well, what about the competition? Because What we haven't talked about is how much of the robotaxi market, of the autonomous fleet market, Tesla is going to have. And this is where a lot of analysts think Cathie Wood is very, very optimistic and downright crazy, right? We might have to call up the therapist again on this one. Remember, Cathie Wood is projecting Tesla to have pretty much a monopoly on this space. Is that true? What about Waymo? What about Baidu? They are making significant strides in the space. And this chart is really where Cathie Wood's conviction lies. Tesla is accumulating data at 110 times the rate of Waymo. Now again, Waymo and a robotaxi are just fundamentally different technologies, different vehicles. Waymo relies on a bunch of sensors, LiDAR and cameras to make decisions, to print out more or less a 3D contour map of its surrounding area, whereas Tesla relies on the eyes, the cameras, and then a neural network to make decisions. And that isn't to say that Waymo and Baidu don't use AI in their own respects. It's just to say that Tesla relies solely on the brain of its neural network to make decisions, just like a human would, right? You know, those super stereotypical videos of a little ball rolling out to the street. You're supposed to be more cautious, slow down a little bit because a little kid's probably falling behind. Yeah, hopefully Tesla learns that not the hard way. Again, this chart's just really to say that Tesla is consuming so much more data than these other companies are. Again, fundamentally different technologies, but this justifies this massive premium that you're paying for Tesla right now because they're most likely to win this race. Now, it's funny, we briefly talked about the Tesla earnings call and what Elon had to say about the Tesla pay package to really convince him to come back and drive this path to a robot army and autonomous taxi fleet. But there are a few other things he talked about that are also pretty promising for the future prospects of Tesla. Their AI5 chip will be manufactured by Samsung in Texas as well as TSMC in Arizona, that brand new factory, the part of the reindustrialization of America that Trump's so high on. And he made this an explicit point. They're shooting for excess production of their chips. Now, why would they ever want excess production? You think excess production, inventory that they can't sell? Exactly. Again, this is where a lot of their profit is getting eaten up, right? It's not that they couldn't have higher profit, but they're investing a lot of this money into having a ton of these AI5 chips to use in their vehicles, to use in their Optimus robots. And he even said, if they have an oversupply, then you could always throw them in the data centers, worst case. Obviously, they're not going to be as good and efficient and cost effective as buying from NVIDIA. Obviously, we know that at this point. I've went into that in plenty of detail in about my 5 last videos. He says himself, we're not about to replace NVIDIA, to be clear, but we do use both in combination. The cat's out of the bag. Samsung announced that it secured a 16.5 billion chip contract with an unnamed client. Musk confirmed it was Tesla. And last point before we wrap this up, this AI5 build out, this production of excess supply of chips is a pretty interesting strategy, right? As Musk says, it's for one client. It's for Tesla. And that allows them to optimize it for the use cases that they need it for, which are extremely unique in nature because they're virtually the only company that is producing autonomous robots and robotaxis at scale. That makes the design job radically easier. It means we can delete a lot of the complexity from the chip, which is great. That's going to certainly save a lot of money rather than buying all their chips from NVIDIA, 30 to 40,000 a pop, and even maybe 70 to 80,000 a pop with Rubin in the coming years. And the bombshell is that Tesla's design team had removed the chip's legacy GPUs, blah, 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 and predicted that the chip could have the best performance per dollar for AI, maybe by a factor of 10. Again, because it's completely optimized for its use case. And you also gotta mention NVIDIA in your earnings call to have any chance of going up. And when you go and just search Tesla earnings on Twitter, you're either going to be really angry, really happy, or just laugh at the stuff that goes on here because the community is so polarized. You have people calling for the complete bankruptcy of the company. You have people that have no idea what's going on saying how record delivery numbers are the only way that Tesla stock's going to jump. Like, guys, just stop. Maybe it's for the best that you don't go on here for your mental health, and also you might contract a disease in your eyeballs, maybe in your brain if you read all this stuff. So I advise you to read cautiously. Now, I hope this video helped. It was really interesting to dive into this because, man, Tesla just always has something going on. The constant overvaluation, the constant battle between retail and Wall Street and how it's uninvestable for Wall Street, unresearchable. But then you have retail that's all in. I saw one guy bought like $600,000 worth of call contracts once the stock went green today. There's so much going on here. And so I want to hear your thoughts. Are you in on the Tesla train? Do you believe that what Elon is building is possible? Is it something you're willing to invest in? You're paying a hefty premium right now. But if what our good friend Cathie Wood is projecting, our good optimistic friend, I should say, then you should certainly have some belief that this is the real deal. I'd love to hear your thoughts because I think I'm optimistic, but I could definitely go either way because there are some serious mechanical limitations that Tesla's running into with the robotaxi stuff. I know they're having trouble with the actual grip strength of the robot, especially over time doing repetitive tasks. So let me know what you guys think and like the video if you learned something new or enjoyed it in any fashion. If you didn't enjoy it, dislike the video, please, and let me know. Leave a rude comment. I'd love to hear it. All right, I'll see you in the next one. Bye-bye now. Bye-bye.